Well, as we look back over the last 6 to 8 years, it's really been an era of extremely good returns for crop producers. Now that has some consequences because high prices of crops mean high feed prices for the animal industry. So while that 6 to 8 years has been great for crops, it's really been a depressed time in terms of incomes for the livestock and all the animal sector. So now what we're seeing is a transition moving from those high grain prices, high feed prices, back to more moderate prices. And what that means is feed prices come down at a time when we have liquidated a lot of our animals. We have low inventories on cattle. Our pork, we're seeing PED problems there to reduce the population of hogs, and relatively small broiler supplies. This means we're coming into an era of much lower feed prices at a time with small livestock numbers, and that means high prices of livestock, low prices for feed, big profit margins, not just for this year, but we think multiple years, an era of strong returns for the animal sector, where we're rebalancing, crops moderating, animal sector coming up in terms of income and returns. Right now on corn, we have very good crop ratings across the country, really one of the best crops in about the last 10 years at this point, and that would project out on our models to about 168 bushel corn. I think that's why we're seeing the futures market so weak for new crop corn. And as we look back historically, we've seen here in the last year corn futures get down in the range of the lower $4. I think if we see this crop continue to come on, we will be seeing some numbers of new crop bids starting in that $3 range, the high $3, and maybe could be looking at that. On the other hand, we've got to be saying it's still too early to really know this crop. We haven't had the adverse weather yet, and really any time as we get into our summer weather pattern, we know adversity can set in, too dry especially, and then too warm. So I think a bit early for the market to be convinced this crop is going to come in at that 168 as we're talking, but those are the numbers you have to be looking at this point. On soybeans, we're facing record acreage of soybeans in the United States, and now it looks like, at least crop report ratings at this point, very, very good, about the second best crop in the last almost 40 years. At this point, record high yields. We're using 45 bushels with that record acreage. That gives us a crop of 3.6 billion bushels of soybeans, a big new record on the bean acreage. Now, we've got beans that have had new crop futures up around the $12 mark, a little over $12. Those could very quickly, I think, move on down towards the $11 mark, or at least $11 cash bids as we get into the fall. I think probably those who don't have as many new crop beans sold as they wish, still an opportunity to do some catch up, but that could fade pretty quickly if this crop looks favorable. On soybeans, we still have the old crop question of will we be able to get through the old crop with a very short supply we have. That is also helping to hold up new crop beans, and the closer we get to finishing this crop year at the end of August, the more we're going to see the resolution to where we're now oversold on exports. We've sold too many beans. Will we cancel some of those contracts, or will we import some beans? Once the market sees how we're going to work through that, I think we'll see the old crop tumble down to meet that new crop on down in the lower $11 range.